Do you want to know the truth behind the Bitcoin pump? What has been going on most recently with the price action of Bitcoin? In this video, we're going to talk about just that. We're going to be jumping down into the charts. We'll be taking a look at the short term and the long term. We'll be taking a look at the on-chain metrics, the inflows, the outflows, who's buying, who's selling, what was going on in 2018, and are we likely to see a similar setup here in 2023? As I get into this video, if you find it useful and informative, smash that like button. I really do appreciate that. Let's see if we can get up to 2,000 likes on this video. It's a target of mine. Let's see if we can get there. I really do appreciate that. If you are new to the channel and this is the first time you've come across here, well, my name is Nick, and we talk the truth, essentially. We cut through the BS and we give you it as we see it. If that sounds of interest to you, subscribe, tap the bell, select all the notifications, and you won't miss another video update. If you're looking for a bit more and you're looking to stay up to date with a finger on the pulse of crypto, join us down in Discord, linked in the description down below. Okay, guys, let's go ahead and make a start with what is going on in the terms of BTC. Let's actually come down into the price chart to start with. We'll start with the kind of here and the now, what's going on with the immediate 1 hour chart when it comes to Bitcoin. Here we have Bitcoin paired up with USDT. I'm not using a USD pair, I'm using a USDT pair. There are different numbers. If you're looking at USD, you're going to have different numbers on your EMAs, you'll have different numbers on your candles and so forth. Just note that this is Bitcoin, USDT, hourly, and Binance is our data source. If you want to replicate it, that's the input that you need. I like to use USDT because it's a big trading pair. I find it a little bit easier to kind of use something like that that's consistent across multiple different areas. Not to say that USD isn't, I just prefer USDT as it is one that is widely used for trading, specifically on futures and things like that. So I like to prefer to use USDT. Now, as you can kind of see here, we are applying Elliott-Wave theory. Elliott-Wave theory, in my opinion, is a must know. If you do not know what Elliott-Wave theory is, I did actually create a course that's linked in the description below. You check that out. And there's also a PDF available in our Discord server that will explain it all in a lot more detail. 181 pages on the PDF. Personally, I think go for the course at 𝗕𝗘𝗪𝗔𝗥𝗘, get the foundation sorted, and then go to the PDF and dive down the rabbit hole of Elliott-Wave theory. Now, with Elliott-Wave theory, we're looking at a move to the downside here. Okay, we can kind of see here 3 waves coming down as a big kind of ABC structure. It's not technically an ABC, I just like to use ABCs. And then you can see 3 internally coming down into this A wave, 3 going up into our B wave, and I'm expecting a move down towards our C waves. Okay, now that would mean that we'd have to break lower than the 200 EMA here on our hourly chart, and I do think that's likely to occur. However, and considering our stochastic and our RSI momentum down here, and our oscillator has come down to the oversold area, we might actually start to see a bit of a move to the upside, right? So we actually might see that invalidation, and it could be that this wave count is incorrect. And what's actually going on is not this one here, but instead it is this. And it's a little bit hard to know for certain because we're in a ranging market. And ranging markets catch people out quite a bit. Essentially, all we're doing is trading sideways in between 2 ranges, or a high range and a low range. You can see up here, this little faint yellow box, 23,332 to 23,536. This is our upper area. You can kind of see that we've visited this one recently. I do think that there's potential to the downside, but with the oscillator actually indicating that a momentum shifting upwards, I would say we're probably going to bottom out here today in the next few hours or so, and then actually move up. So our projection probably is going to be a shift and a change. I'm going to go ahead and take a double bottom scenario down here, 23.8 maybe, something to that effect. We'll see how it kind of goes. Yeah, for now, I would say we're probably in some kind of micro correction here. We probably could come down a little bit further before we move up, but keep it in mind, these small time frames, yeah, we could probably come down to 22.6 if we really had to. We don't really have to come down that low, but we could if we wanted to. So yeah, we'll look at that 22.6 potentially being the lower side, and then look for that move upwards and break upwards more towards 23.8, something to that effect. So as you can kind of see, we're just kind of ranging, we're just bouncing around a bit, but we are correcting those momentum indicators. Tomorrow is going to be the key day. As we kind of go into next week, there's a lot of bearish stuff occurring. I say bearish, potentially bullish, or who knows, right? I reckon a lot of stuff's been priced in. We're waiting for FOMC next week and a lot of news and things that's going to come out. I think we'll probably react negatively and go down, because I think a lot of it's priced in already. But we'll see how that kind of goes. So on our hourly chart here, as you can kind of see, pretty standard weekend stuff, ranging market. We're not really going to do too much, I don't think. We'll probably bounce around a little bit. as those retail investors kind of take the price upwards and down, of course, and it'll just bounce it around. Our 4 hour is showing that we have momentum down still, so watch out for that. Yes, we're oversold, but we can still come down a bit more. That might actually indicate why we end up going down into those lows just a little bit further before we move upwards. But again, you can kind of see that we're just in this ranging market right up here. It's not the best. Now, if I go ahead, I don't think a parallel channel will fit here very well, but I'll try it and see if it will kind of come in any way, shape, or form. Maybe it does. Let me see if we can get this across here just a little. Maybe it does. Maybe we come down, test this low 22.6, then move up again. And so forth. Like I said, it could be a diagonal pattern from a few videos ago. Still expecting slightly higher push to the upside. Our 4 hour chart tells us the same story, but we do have to come down just a fraction more before we do move up. Our 8 hour chart is very much a similar story with loads of momentum to the upside. Same with the 12, 16, and 20 hours. They are all showing upward momentum. So we're not done pushing higher in the price action of BTC, in my opinion. Now, on the daily, we are correcting down, and, you know, depending on what happens next here on our daily chart, we could either come right back up into this higher range, which is our $24,000 to $25,000. This is where liquidity is currently sat. So if you follow smart money concepts, then obviously up here is where you're going to find the obvious kind of premium zone. This is where basically a lot of sellers are going to be. So you kind of keep an eye on that. 25 is probably going to be the upper limit on where we end up moving to before getting hit with a heavy hammer to the downside. We did see that with this wick up here. This is actually the 200 EMA on the weekly. You can see right here, okay, our weekly chart is our 200 EMA, that's the white line, and we can see that we wicked up into this area. If I remove that parallel channel, actually what I'll do is I won't remove it, I'll just make it invisible on our weekly chart, and in fact I'll take it off of anything that's not the daily, I think. There you go. So you can see that we kind of got rejected from our 200 EMA on our daily chart, right? We are overbought on our weekly, sorry. So we are potentially looking at maybe moving up towards that 25k, but I don't think there's terribly too much more from there. At some point, this will be correcting back down. We have moved up quite a bit, and this move to the upside wasn't really driven from anything more than the DXY, right? The DXY going down like this has meant that Bitcoin goes up, right? These two things are the opposite to each other. It's not just Bitcoin, though. I mean, the DXY is the dollar, the US dollar index, right? So as the dollar is devalued, you need more dollars to purchase your assets, right? So there's an intrinsic value of the asset. We all know what that is. We don't really rate it in dollars or sterling or euro or yen or whatever, right? There's an intrinsic value to it. And if the dollar goes down in value, you need more dollars to buy it, right? So when we talk about the truth behind what's going on with the pump of Bitcoin, what we're referring to here is the lack of actual demand coming in for Bitcoin. And all that's really happened here is that the DXY has gone down in value, so you need more dollars to buy your assets. The Bitcoin value goes up, the altcoin values go up, right? You couple that green in the market with some FOMO, and you kind of got a recipe for a fake bull run or a bull trap, as I like to kind of refer to it as. Now, there is some interesting stuff occurring, of course. Let me come back over into our Bitcoin chart. That shows us some kind of confidence, right? We've moved up 50% here, 51, I think it was, to the upside on Bitcoin, which means that, yeah, it's going to be 53.89%, right? So it does mean that we've got a bit of a journey here. If we want to come down into lower lows, we're going to need to see some decent structure take us there, okay? At the moment, that's not necessarily going to be something that I want to kind of consider, which does bring me on to the Wyckoff accumulation pattern when it comes to BTC. Now, the Wyckoff accumulation pattern has two different structures or two different schematics to it. One has a spring event and one does not have a spring event. Okay, I think we're in phase B up here. As I've spoken about this many times before, there's nowhere else in the price chart here of Bitcoin that actually has had a secondary test in phase B and a move upwards above the automatic rally. Okay, so the only place that I can loosely get this to fit is down here at the moment, with our selling climax occurring down in the June lows, our automatic rally happening up here. Okay, this was basically July of 2022. Our secondary test coming down, actually the secondary test is July and the June lows was the AR. So the secondary test was July. Then we come up just above the automatic rally here. Okay, we set that resistance line. And then we come down. Secondary test in phase B is November of 2022. And right now we're above the automatic rally from the June of 2022. Okay, so that puts us right here. Now we are not allowed to cross higher than this resistance line on the schematic. It doesn't matter which one of these you follow, you're not allowed to do it, okay? And that would be 25,211. So we shouldn't pierce that level. Instead, we should start to move down. We should start to see the correction down on the schematic, okay? All the way down to the secondary test in phase A, this low over here. You'll notice that we come down in schematic 1 and we break down lower than that secondary test, okay, in phase A. Whereas in plan 2 or schematic 2, we actually find this as a support area and we do not break it. So if we lose this level of $18,626, then we actually come down into a new lower low, into a spring event following the accumulation pattern number 1. If, however, we find support at 18,626, then of course we're following pattern number 2, and yeah, there's no new lower lows. So both of these patterns are in play. So like I said, we're going to correct down, in my opinion. It does not necessarily mean new lower lows, but it does depend on where the liquidity sits, right? So anyone who follows smart money concepts, you'll know what liquidity is and kind of what it represents. We want to see where the liquidity sits in the market so that we can get confidence behind what is going to happen. The market movers, the institutional players, the big banks and institutional players, the whales, they want the liquidity. They don't care about just moving down following a pattern. That's why there's 2 of these patterns, both Wyckoff accumulation patterns, one with a spring event, one without a spring event. It's because it's manipulation in the market. They're going to go after the liquidity. Right now, that liquidity, in my opinion, is quite far down in the charts because so many retail investors have gone long on Bitcoin. So bear in mind, there's going to be a correction. Both of these schematics show the correction. Okay, so that kind of gets you up to speed with the charts, right? We can see there's some bearish stuff. We talk about the divergences all the time, so I won't talk about those today. I'll talk about them again on Monday. Maybe I'll talk about them tomorrow. We'll see. But let's jump down into the on-chain data, right? Because the on-chain data does show us some interesting things that are occurring. So straight off the bat, if we take a look at what is going on right up the top right-hand corner here, we have 795,000 Bitcoin going onto the exchanges and 813,000 Bitcoin coming off the exchanges. That is since the 1st of January 2022. Now, if anyone deals with their math, they'll know that that is 17,000 Bitcoin difference. That basically tells us that all of the accumulation that we have seen, all of those fantastic bull market rallies that you've seen since, when was that? That was the lows of November, right? But really, we're talking since the 1st of January. We've seen the price rapidly move to the upside, right? Take a look at the chart here on the daily. You can see it's rapidly moved to the upside. That rapid movement there is only on the back of 17,000 Bitcoin. That doesn't make a lot of sense, does it? So if only 17,000 Bitcoin has come off of the exchanges as the net difference between the inflows and the outflows, then only stuff that you've seen outside of that is as simple as moving Bitcoin between player A and player B. No decent accumulation has occurred. This is also represented in our 2 graphs here. We have our line charts, and you can see how flat this is down at the bottom since January. It's showing us that there isn't actually terribly too much movement going on with large amounts of Bitcoin, right? We see all these kind of statements out there saying that whales have been accumulating. Well, they haven't been accumulating much, have they, at 17,000 Bitcoin, right? If we actually zoom out and we pay attention to the data, it's not actually that much accumulation occurring, right? Unless, of course, someone is selling it to them. Who is selling that Bitcoin to them, right? If there's accumulation occurring here and we have an increase in wallet counts, well, where's that Bitcoin coming from? Because it's not coming from the exchanges, right? So is there some over-the-counter stuff going on? Or is it those pesky exchanges that were on the cusp of bankruptcy looking to sell off their assets over the counter to some whale investors, maybe? Speculate on that all you will. But essentially, the numbers don't lie. We have seen very insignificant amounts of accumulation occurring off of the exchanges. Now, when it comes to a bull run, we all know the definition of a bull run. You can Google it if you don't. It is essentially when the demand outpaces the supply. And, well, I don't think 17,000 Bitcoin dictates an outpacing of the supply. So not a lot of demand if it's only 17,000 Bitcoin, right? So we want to be really, really cautious. We can also see this on the net difference change over 30-day average bars. These 30-day average bars are giving you a symbol as to actually just how boringly static the demand is on Bitcoin at the moment. We can see that during the FTX saga, with everyone panicking or withdrawing their assets from the exchanges, we saw huge amounts of Bitcoin leaving the exchanges. And then since December, it goes back onto the exchanges. That's not bullish. When in a bull market, you don't see Bitcoin going onto the exchanges. You see it coming off as people are trying to FOMO and buy it and withdraw it and hodl it and keep it safe in their cold storage wallets. And yet what we see here is Bitcoin flowing onto the exchanges. It's not really coming off. Well, 17,000 Bitcoin total has, of course. So just kind of keep it in mind. The data here at top level, when we zoom out and we don't pay attention to just candlesticks on the chart, doesn't look overly bullish. Now, of course, I'm not going to talk about the hodl waves here, but we're going to jump on over into the inflows and the outflows, right? So we have this top level, all of 2023 so far, 1st of January to yesterday, which would have been at the 27th. And here we have a line graph over, I think it's 30 days. And basically what this is doing is it's representing every day, whether you have an inflow or an outflow, which one or which line is greater. The green is outflows, the reds are inflows. And actually the lines are just dancing around each other, right? They're just basically being matched up. Not as much, and it's not as bearish as that of Ethereum, right? If I quickly just flick over to Ethereum's data here you can see that the red line is consistently above that of the green line on Ethereum, right? This basically tells us that there's a significant amount of Ethereum flowing to the exchanges, and there isn't really that many people withdrawing it. So we should be quite concerned over, whether we are feeling bullish or bearish, specifically when we take a look at these particular graphs. Now, Ethereum's incredibly bearish. We can see that here. And we can also take a look at the Ethereum data, and we can see quite a significant difference between positive amounts of Bitcoin going on, or Ethereum going onto the exchanges versus coming off the exchanges. Now, if I come back over into our Bitcoin data, it's not as bearish. It is actually pretty reasonable, but it's not that impactful. We have that total. It's only 17,000.68 Bitcoin, right? 17,860 Bitcoin difference. So we've been dancing around with our lines here, but it hasn't actually netted a huge accumulation of Bitcoin coming off the exchanges. So we should be cautious. It's kind of the point here. Now, as I kind of progress on, we can take a look at a few different wallet counts. Here we've got Bitcoin Dust over 0.01 BTC. There's actually a fair amount of wallets here. This is 11.47 million wallets that have over 0.01 BTC, and you can see it's still accumulating, right? So there are some people out there that are trying their hardest to get some exposure to Bitcoin, and hats off to you for it. I don't think this is a problem. I think if you can get 0.01 BTC and hodl it, it's not a huge sum of money to you, hopefully, and you can kind of just look after it for a period of time. I think you're going to be okay, and you can build on that. I think that's it's a good thing to see. I'm happy to see that line going up. I don't want to see this one go down. I think that would be awful to see this one go down. Now, as we move up into the slightly larger wallets, we do have 0.1 BTC, and again, accumulation occurring there. The shrimps, which are over 1 Bitcoin, still accumulation occurring there, and the dolphins over 10 Bitcoin. Okay, and we can see as some fluctuations going on here. I don't want to say it's going up. It looks like it's actually coming down a bit. So some shaking out occurring, right? Now, at some point, these retail investors more than likely are going to succumb to selling pressure. And again, I don't want the krill to shake out so much. I think that these are the kind of individuals that have got some exposure to Bitcoin. I think they can be okay just holding. Hopefully they will be. I don't want to see them. It's like seeing the worst of the most vulnerable people kind of getting shaken out of the space. I don't want to see that. But what I do want to see is some retail investors locking in some gains. If they've seen some profits, I want to see those guys kind of taking stock of the situation and maybe reassessing their positions. Now, I'm not a financial advisor. I can't give anyone financial advice, but at some point, I do think the shrimps and the dolphins are likely to sell. Now, there might be many different reasons for this. It could be that, it's a case of putting food on the table for the family, or keeping the roof above the heads of their family, for example, all the way through to maybe they're just trading it or whatever. And there's going to be a whole host of reasons. We can't just tar everyone with one brush. But the bigger economic climate in the world is pretty bearish, right? We can't be too confident. We are staring down the barrel of some pretty harsh things in the real world, right? Outside of some lines on a price chart, for example. So I think there's actually some people, some retail investors specifically, that have got some interesting amounts of crypto. At this point in time, the price has moved up. We've obviously seen it's DXY driven, not really volume driven. It's got some FOMO behind it, and maybe some retail investors will start thinking, okay, I've got an increase in my mortgage, this can potentially help me survive, you know, it might be able to do this and do that, and there might be a success story there. So I do expect some retail investors to start thinking about that, specifically when we get into these kind of areas. If we do push up to 25k, I think that's really going to be an interesting point for retail investors to really start addressing their positions. Now, that's retail. As we kind of come up into the larger size wallets, we've got another 3 here. We've got over 100 Bitcoin, over 1,000 Bitcoin, and over 10,000 Bitcoin. And as you can see, in the last 24 hours, whales have dropped, right? We can see these guys coming down right here. Okay, you can see that they were rocking up here at 2,049 accounts, and now they're down at 2,033 accounts. Doesn't sound like a lot, but you've got to bear in mind this is anywhere between 1 and 9,999 essentially. Now there is an increase up here in the Kraken, so I'll assume that actually there's a bit of a transfer occurring. There's probably consolidation of wallets, potentially various different things. The Kraken wallet I've often likened to being cold storage for the whales, okay? And I do think that they are looking to flood the system with excess Bitcoin at some point in the future, and I'll talk about why in a moment. You can also see that these sharks have come down, so there's a couple of selling wallets here that have been selling these size wallets, and we've seen a little bit of accumulation from retail and a little bit in here in terms of the Kraken size wallets. So let's now we kind of got an understanding, right? We kind of know that there is retail investors that have been buying every dip and every pump so far, and they haven't really been shaken out. And we've seen whale investors basically just selling. They're selling into every pump. And they're buying up some dips occasionally and then selling again, right? And they're basically just dropping the price of Bitcoin gradually over time. And they're helping to kind of, fuel those movements to the downside. But why do I talk about it, and why do I think it's so important, right? This whole video is about truth, right? And I'm giving you kind of what the data is in its kind of cleanest, rawest form. And again, I'm telling you my kind of thoughts and opinions on it. Let me know what yours are in the comments down below. Now, if we take a look at 2018, this is what the retail investors were looking at, right? We call them shrimps. They're over 1 Bitcoin per wallet. Now, we can see that they bought this dip over here. Okay, you can kind of see how that black line, which is the number of wallets, increase as we have this low, right? This happens because there's a load of moon boys on various different social media platforms, even back in 2018, saying that the bottom of Bitcoin is in, we're going to the moon, right? Price comes up quite nicely here. You can see the price moved up quite nicely. It didn't mean it was it did not represent, I should say, the bottom of the bear market. We all know this, we can all see this, right? But we can see that that price spiked up very much similarly to how we have it now, right? A very rapid movement from a bottom location here. Okay, of course, when it got to the top, what do you see? You see retail investors start to come out of their positions all the way back down here. Okay, and then they start accumulating again, and then they come out again. This tells us that actually retail investors, when their portfolio reaches a certain level, instinctively, they kind of know that they need to come out, right? That money means something to retail investors. Whereas whale investors, they operate differently, right? Institutional investors operate differently. They don't think, they don't act emotionally in the same way. Then here you can kind of see how these guys are acting emotionally. But of course, price starts to come on down, and yeah, they think it's just another correction. Bottom's already in, so they continue buying. A new low is formed down here, okay, in April of 2018, and yet they continue to buy, right? They come out a little bit, they continue to buy. Even as it comes down into another low, okay, bearing in mind, this was the bottom, no, this was the bottom, now this is the bottom according to influencers on the social media, and they continue to buy up, okay? Price goes up, it comes all the way back down again, but that doesn't phase them because the bottom is in. They continue to buy. They continue to buy all the way until you get to this really flat moment in time. And this is where liquidity is. Now, why is that important, right? I'm going to create a whole smart money concept course just so you guys can get really familiar with liquidity. But this is perfect storm scenario right in here. This flat period here where price just trades sideways is where liquidity is. And you can see that these guys are starting to sell, okay? But price isn't moving. Why is the price not moving? The price doesn't move there because this is where the whale investors are buying. Okay, this is where the liquidity is, right? And they are buying it. and they are buying up. And you can see these wallet counts increasing dramatically, okay, as this flat period of time occurs. And as you can see, this is where the retail investors were shaken out of the space, and they sell right into the very lows. So they bought this pump here, this dip here, all of this, all these highs they paid premium prices for, and then they sold on the way to the actual bottom. Now, it doesn't make much sense, right? It's not logical that a retail investor wants to do this, but it's what a retail investor does. They act emotionally, not logically, okay? So when we have this data and we think, okay, are we going to be doing the same thing, right? Have we got very similar setups? Well, before I talk about that, I do want to talk about the Kraken wallet. The Kraken-sized wallet is a wallet that has one purpose, in my opinion, on a bear market. Its whole purpose in the bear market is to accumulate Bitcoin, as much Bitcoin as possible, all because it wants to flood the ecosystem with excess Bitcoin when the time comes. Let me show you 2018 wallet counts. This here represents what the Kraken wallet did, and this is the over 10,000 Bitcoin per wallet, okay? What they did was they accumulated during the bear market, okay? They got the wallet counts nice and high. You can see this flat period right here where the liquidity is, right? And they know that this is where retail investors are now selling. What did they do? They just basically dump it, right? And I'm not saying that they sell it all. What I'm saying is they basically make it available to sell, basically tricking retail investors thinking that this thing is going down significantly lower. And so retail investors are selling right into the bottom, but it was the Kraken wallet that actually created the bear market bottom at the actual end. Okay, so we can see how this is kind of operating. Now, I bring this up because where are we right now? Well, the Kraken wallet has been accumulating during this bear market. Whilst the Kraken has been accumulating, the whales have been dumping. And whilst the whales are dumping, you've got retail buying. Okay, so at the moment, what we've got here is a very similar setup. It's almost identical. Every single time we have a fresh low in Bitcoin's price action, you've got some moon boy on Twitter saying, look, the bottom's in. We're going to the moon. It's fantastic. Buy now. You'll regret it. And anyone who says anything different, well, you're just salty because you didn't buy the bottom, right? That's essentially what we're being told. But history tells us time and time again, you know, what actually happens, right? The bottom wasn't in June. We went down into a new lower low. Now the bottom apparently is in. Are we confident? No. Like I said, we've got the schematics for the Wyckoff accumulation pattern. One has a new lower low, one doesn't, right? It's too early to know for sure, right? But one of the things I do know is that we have wallet counts here that are not giving us the indication that retail is yet ready to sell. So until retailers sell, where are the whales going to be buying their Bitcoin from? Because whales will want to get in and they won't be paying a premium. So where are they buying it from if they're not buying it from retail investors? Well, the only place I can think of is going to be all of these bankrupt companies, such as FTX, Genesis, Alameda Research, BlockFi, maybe Grayscale in the future. Who knows, right? Maybe that's where the Bitcoin comes from. Maybe this time retail investors don't need to be, you know, shaken out of the space. But my gut tells me that more than likely they will be shaken out of the space. They will have to be shaken out of the space because the Bitcoin that they currently hold is not in the hands of the billionaires and multimillionaires yet. And I think that is the objective here. This whole move to the upside isn't backed by volume. It is only backed by the DXY dropping and a little bit of retail FOMO. And this market is incredibly fragile. Everything that's going on in the real world is incredibly fragile to these speculative markets. And I'm not confident in thinking that a new lower low isn't just around the corner. But let me know what your thoughts are in the comments down below. I know this is a longer video. I wanted to kind of talk through a lot of this stuff that I talk about quite quickly in the kind of day-to-day streams and stuff like that. Let me know what your thoughts are in the comments down below. I try to do this in an unbiased way. I personally think that we probably will have another lower low, but that's just my thoughts. What's yours? If you found this useful and informative, hit that like button. I do appreciate that. If you're new to the channel, subscribe and join us in Discord. We'd love to have you down there. Until the next one, guys, have a fantastic day.